us now to talk about what's driving the markets and where they're primed to go next. Jeremy Siegel, finance professor at the Wharton School at the University of Pennsylvania. I haven't seen you in a while, Professor. Welcome. It's good to see you.
Yes. Good morning, Joe.
For a while, I think you thought the Fed was a major part of the equation. You wanted one more cut. You got it in October. Now the Fed is out of the equation, and we're back to what happens with China. Is that your view, basically?
Yeah, absolutely. I mean, despite Trump's visit with Chairman Powell, Powell feels very comfortable now. I think he's got the support of the committee. He's got the support of the market. We're back to a positive sloped term structure, which is a good sign. I think the Fed is not in the equation anymore. It's the trade deal. Market wants a trade deal. We get a trade deal where we lower tariffs. We're going to get a good 5 to 10% pop, I think, in stocks, even from today's levels, which are all-time highs.
That's not asymmetric risk. That's another 5 to 10%. But certainly, if we didn't get a deal, which you say is 70 to 80% priced in, if we didn't get a deal, and if the trade war were to really heat up, it'd be worse than 5 to 10% the other way, in your view?
Yeah, I think so. I mean, if we ratchet up, and it's way out of expectations, you know, the 25% tariffs, I still think are on the books for December 15th. I mean, if somehow that comes about, you know, I think we're going to have a swoon in the market. Don't forget, when we had a 20% drop, remember last Christmas, on just the fears that this was heating up. If it actually comes about, it's not going to be any better. So, you know, I don't think that's going to happen. I think the worst is a muddle through. We keep on delaying that. The market will tolerate that for a long time, but I think it's be hard to get a lot of progress on stocks without a deal.
I don't know when you first started recommending stocks for people. I go back to 780 on the Dow, so I'm kind of sold on the notion of owning stocks long term. But I've also been sold sort of on free enterprise, private sector, capitalism. I've been sold on that for a long time. Would your whole view of the way things work change if we were to become a lot more socially democrat, whatever they're calling it, whatever Bernie Sanders and Elizabeth Warren call their philosophy? Would you become less bullish long term on the United States if we adopted a lot of their program?
Well, I agree with you. I mean, basically, the free market system is what's generated our wealth over time. You know, the first edition of Stocks for the Long Run came out in '94. I felt really bullish about the United States, and I still do. Let's put it this way. I think the American public want a moderate in there. They don't want a Warren, and they don't want a Sanders. I think what's really important, of course, is also the Senate, as we all know. The odds makers are still saying that the Senate is likely to stay Republican. So even if one of those two win, of which Warren is the more likely, although really the race has become really tightened up, between Biden and Buttigieg and Warren. It's actually almost a toss-up in the markets. But if Warren should come out ahead and the Senate stays Republican, no wealth tax, no Medicare for all, none of that's happening. And, you know, so basically you have a standoff, gridlock, which, of course, a lot of people think is not that terrible for the stock market.
So you're watching Predicted. I watch that, too. And the three you mentioned are all in the low 20s. They're almost tied.
It's a real horse race there. Actually, it's my theory Bloomberg entered the market into the primary system, not so much to win, but to get some votes, which he could have a lot of power to throw if there's a deadlock convention among these 3 or 4 top candidates.
Not everybody is fortunate enough to go to Wharton or Penn, but I'm not going to blame you entirely for 70% of millennials think socialism is a good idea. But what the hell's happening with you academics and professors? Did you leave that part out about how the profit incentive allocates capital to where it's most effective? What happened? What are you doing?
I mean, our department tries to hold it up. I mean. Yeah.
Are you surprised? I
think it's one of the only departments at Penn. I mean, no, it's also a matter of definition and understanding. And really faulty understandings of history.
Yeah.
I mean, the kids are not learning history of socialism and what's been tried and
We're
failed.
doing our part. We had
I
Chris
think
Jenner on.
that's a major.
I think if we can get to the
problem.
Kardashians, if we can get to the Kardashians, you know what I'm saying?
They're the biggest capitalists around.
That's what I mean. They got to start. They got to start preaching it from the mountaintop. Professor, yeah, go ahead.
Go ahead.
No, I'm just so 30,000. You've been talking about it for a long time. Looks like someday, not in the not too distant future, that might might be the case.
Well, yeah. I mean, someday we're pretty fully priced. But what I like about it is Europe is beginning to look better. And if the dollar doesn't soar, and if which is already, dollar looks like it's not going to be moving up, I think the reason, I mean, don't forget, so much of S&P profits come from Europe, come from abroad. If we get a turnaround in Europe, Japan, etc., we can drive some good pricing and good markets in S&P.